In real estate, the property price never goes up. That's right, property price never goes up. What it goes up is that people's ability to buy that property, that goes up. So it's always about the people, it's always about the person who is actually buying the property from you. Let me give you an example. Let's say if you buy a property today, $1 million, and that $1 million house, you are saying that in the next 6 years time or 10 years time or even 15 years time, whatever be the case, if you are saying that in 15 years time that property value is going to go up to $2 million, what you basically saying that somebody that you believe will be having an ability to buy that property from you in that $2 million. And if you don't find that person, then your property value is not gone up to $2 million. And this is how fundamentally you need to ask yourself this question, that if you are buying something and if you are blindly going particularly into residential real estate, that it is going to go up double in 10 years because historically it has happened, then the question that you will be asking is that who is that person is going to buy my property next 10 years or 15 years or 20 years time and will pay this much of amount of money, and why? And if you ask these questions, then sometimes you will find that perhaps it is not going to go that much the way you are thinking. Perhaps it will be difficult for someone to afford that property that you are currently owning now in 10 years time with that amount that you are thinking. So property price does not go up. What it goes up is the people's ability to buy that property from you. As long as people's ability goes up, then people will be able to buy the property, and your property, you will get that value that you want. Now let me give you an example, particularly in residential real estate, that why your thought process perhaps came like this. Like if you go back to 10 years, back in 2014, when I started investing in 2014, I invested quite a lot into residential properties as well. One of the fundamental things at that time was that I was looking for a positive cash flow. I never ever thought about that growth that I'm going to get. I always thought about, okay, whatever growth that I'll get, that's like an extra, but I need a positive cash flow. How I can buy something that from day one it is going to give me money, it is going to give me cash flow. And so the first property that I bought, let's talk about that average property. Average property at that time, I live in Sydney, and then I was looking for somewhere in Brisbane. And that average house is a 3-bedroom, 1-bathroom house that I was looking for about $300,000 property. It is about decent 500-600 square meter of block and $300,000 property price, and with a little bit of changes I might have to do, like 10-15,000, and that by paying that, the rent that I am going to collect is $500 per week. Now these two parameters, $300,000 purchase price with a $500,000 $500 per week rent, is giving you roughly about 8% gross rent return. Now 8% gross return back then was a positive cash flow. Why? Because the interest rate, there's a third parameter, which is the interest rate. At that time it was around 4%. I remember around 3.98, 3.99 was my interest rate. So $300,000 property, $500 per week rent with 4% interest rate on the bank is a positive cash flow property. Fast forward today in 2025, that $300,000 property becomes $750,000, which means that it has gone up to 2.5 times. Means somebody would be able to pay that property for 2.5 times more than 2014. The same property in Brisbane I'm talking. That $500 per week has gone up to $800 per week rent. So that's like 1.6 times growth of the rent. And that 4% interest rate, unfortunately, has gone up to 6% interest rate at the time of this recording. Now, the equation that has changed is that it's not only that the property price has gone up more than the rent, it also the interest rate has gone up. And which is why now the same property became completely negative cash flow. In fact, quite a lot negative cash flow. Now, with the same property, it can change if the interest rate goes up. Instead of going up to 6%, if it goes down to 2%, then again that property could be or very close, it could be a positive cash flow. So the point of my saying is that what used to be a positive cash flow about 10 years ago, now it is not. And then the question that you will be asking is that if you are buying that, what could happen that even 10 years down the line that will become positive cash flow? And the answer would be, it is going to be very, very difficult, because some of the parameters on top of that is what we call outgoings, what we call the owner's expense. Those owner's expenses are keep on going up, such as land tax, council rates, insurance, management. All these costs are keep on going up. So unless the property's rent drastically goes up, which we believe it is not possible because the people cannot afford that much, or unless the property's value drastically goes down, which means that there are less number of investors and properties not become lucrative, again we think that that is not going to be the case, then the only parameter that you have perhaps is the interest rate. So the only way it can go and the same property can become like a positive cash flow if you are actually seeing that the interest rate is going down to like 1%, 2%, around that range. Now, which is why if you are buying a property today and if you are thinking that negative gearing is fine, negative cash flow is fine, the only thing that you are betting against is perhaps that you are saying, okay, the interest rate is going to go down drastically low. And if that happens, then you will become a huge gainer. But if the interest rate keeps on holding around that range or 5% or even little bit less or little bit more, then you will be seeing that you will going backwards, because every single year you are going to lose money from that property. So then your question would be, okay, yes, I'm going to lose the money for next few years, but after that it is going to be positive cash flow. Again, I'm going to challenge you, ask yourself how it is going to happen, because all your expenses will keep on going up. Why you think that this is going to your property, your residential property is going to go up, particularly it's going to become a positive cash flow? And the answer probably is that it is going to be remaining negative cash flow property, and that is how you will become frustrated. After 5 years, 10 years time, you will see that, oh, you know what, it is a terrible investment. But remember, real estate investment is also about timing, perhaps at what age you are now, when do you want to retire and all. And my point of this story is that you need to be calculative in terms of your plan, and you need to say that why it is going to go up and why it is going to become like somebody wants to buy property from you in a much higher price, and why you think that you will be able to make money from that. So residential properties, in a nutshell, 10 years ago it used to be a positive cash flow property, and now it has gone up. Yes, historically it has gone up. With that, the question that you will be asking is that what's the future for the next 10 years or next 15, 20, 30 years, how it is going to grow, why it is going to grow. And as long as you can justify yourself, by all means go for it and buy. My one point here is that if financial independence is your goal, and if you see that residential properties is not going to give you financial independence, you need to ask yourself, okay, what can I buy that can give you financial independence? And the answer probably could be a commercial property. And at this stage, if you say commercial property, you will be saying that, Soman, I do not know anything about commercial property. That's fine. You can learn things. This is how I created this YouTube channel, and I am actually sharing all this information, that how I actually change my mindset, how I actually doing these things in a way that now I can invest into commercial property. Just buying 1 or 2 commercial properties, that can boost a significant cash flow income. I am not saying is that sell all your residential properties. I am saying is that just start investing into commercial, and then you realize that how lucrative it is, what are the things that you can do in a commercial property that is not possible into residential properties. So hopefully you now understood that why residential property, what used to be a good opportunity but not anymore now. Commercial property is still a good lucrative opportunities, and 10 years, 15 years down the line, we don't know. If the yield get compressed, it means like if people are paying more and more money into the commercial property, if the return is lesser and lesser, perhaps commercial property will also become a problem then, because if let's say if you are losing money in commercial property, why would you buy something which is losing money? Same thing is for residential. At that time, perhaps some different asset class or something will come, and then we need to invest. So at this stage, I would say the best bet for all of us is to invest into commercial property, because commercial property will give us income, commercial property will give us cash flow, and commercial property also will give the growth the income plus growth, both you will get in a commercial property. I hope you find these videos helpful and to understand that why residential property and why not residential property right now and why commercial property now. If you find these videos helpful, consider liking my video, subscribe my channel, turn the notification bell on so you get to see more videos like this, and it also helps me to reach out to more people like you. Thank you so much for watching, and I'll see you next time. Bye bye.